Okay, so let's get right into it. Everyone's talking about MicroStrategy, or MSTR, and for good reason. They're not just buying a ton of Bitcoin. I mean, they are, but they're doing something way more interesting. They're basically building a whole new financial engine that could completely rewrite the rules for how big companies manage their money and their debt. So you might be wondering, how in the world are they funding these huge Bitcoin buys? Well, they've come up with this really unique financial tool that lets them raise money specifically for this mission. And, understanding this one tool is really the key to unlocking their entire strategy. All right, so the heart of this whole operation is a special kind of stock they've nicknamed Stretch, or STRC. Just think of it as their dedicated Bitcoin fundraising machine. When they want more Bitcoin, they just fire up the machine and issue more Stretch. It's that simple. But the real genius here is how they prove to everyone that it's actually safe. To show just how rock solid this whole thing is, MicroStrategy went and created a brand new metric. It's a really simple rating, designed to be totally transparent and show investors, plain as day, just how safe their money is. So let's break down this key metric they came up with, the BTC rating. And this isn't just some random number. This is the foundation of their entire argument that what they've created is one of the safest financial tools out there today. As of right now, the BTC rating for Stretch is 6.4x. This one number, this is the core of the whole operation. It tells you everything you need to know about what's backing this stock. So what on earth does it actually mean? Well, this visualizes it perfectly. That 6.4x rating means that for every $100 of liability they take on by issuing that Stretch stock, they have $640 worth of Bitcoin sitting there as collateral. It is massively over-collateralized. And that's just a completely different universe from how traditional company debt works. And this slide just hits the nail on the head. A normal corporate bond is basically backed by a promise that the company will sell enough stuff in the future to pay you back. But Stretch, it's not backed by a business plan. It's backed directly by a hard asset you can verify on a public ledger instantly. So here's the bottom line. By backing their debt with a hugely over-collateralized, super liquid asset like Bitcoin, MicroStrategy's arguing that they've basically eliminated the usual risks you see in corporate finance. I mean, even if Bitcoin's price were to crash, we're talking a drop of over 80%, the debt would still be completely covered. But the innovation doesn't stop there, not even close. This traditional financial asset, this stock, is now being transformed. It's being brought onto modern digital rails, basically bridging the gap between old school Wall Street and the new world of crypto. So the next evolution here is to take this STRC stock out of the traditional stock market and put it to work in the digital world. There's a new protocol that is actually tokenizing it to create something called USDA, which is a blockchain-based stablecoin backed by all the safety of MicroStrategy's Bitcoin pile. And the process is actually pretty simple. MicroStrategy issues the stock, investors like you and me could buy it, and then a new protocol kind of wraps that stock into a digital token. And what you get at the end is USDA, a stablecoin, meaning it's pegged to the dollar, that lives on the blockchain and offers a high yield with the verifiable security of Stretch. Now, this is a huge deal. Why? Because it's a direct challenge to the old school banking system. I mean, why would you keep your money in a bank account that's earning you basically 0% when you could hold a stable digital asset that's yielding 7, 8, maybe even 11%? It lets people completely bypass the banks and moves us from that fractional reserve system to a world where assets are fully and transparently backed. Okay, let's zoom out for a second, away from the specific financial products, and look at the grand vision, the big idea behind MicroStrategy's entire playbook. Because this isn't just about one company's bank account. This is a thesis about the future of all companies. The core argument here is that Bitcoin isn't just another asset you can trade. No, it's a fundamental technological invention, right up there with things like steel or electricity. And just like those foundational technologies, the belief is that every single company will eventually adopt it. It's not a question of if, it's a question of when. And history shows us this pattern pretty clearly. When steel first came out, people were literally afraid to cross steel bridges. When electricity was new, competitors ran campaigns to scare everyone away from it. And in the 90s, people were told to never buy things on the internet. These huge, world-changing technologies are always met with fear before they become essential. And this framework suggests Bitcoin is just the next one on that list. And this is absolutely crucial. This whole strategy creates two clear paths for other companies to follow. The first path is direct. A company just buys Bitcoin and puts it on their balance sheet, just like MicroStrategy. But the second path, the indirect one, is just as revolutionary. A company could decide to never own a single Satoshi of Bitcoin directly, but instead hold a safer, higher-yielding instrument like STRC, basically swapping out their useless cash reserves for a Bitcoin-backed asset. At the end of the day, MicroStrategy is betting that the answer to that question is a massive, resounding yes, one way or another. By building this incredible financial machine, they haven't just made a bet for themselves. They've basically laid out the blueprint for the entire corporate world to follow. And that leaves all of us with a really powerful question about the future of money itself.